The security market line, or SML, is a graphical representation of the capital asset pricing model, CAPM. Firstly, I would like to show you the capital market line that closely correlates with this model. Firstly, we'll draw the y-axis, which will show our expected return. Then we'll draw the x-axis, which exemplifies the volatility or level of risk represented as a standard deviation. We'll then plot our values. And then, in accordance to each plot put onto the graph, we can then create an aggregated curve, shown as this. We can then draw a line that is then tangent with a CML, which represents our security market line. At this point of origin, this represents our market portfolio. From there, we'll be able to identify the systematic risk of the portfolio and the market return. The market return is exemplified on the y-axis, and the systematic return is then shown on the x-axis. Now I'd like to show you the systematic and unsystematic risk graph to show how diversification can minimize its effects upon a portfolio. Okay, so on the x-axis, we number our securities. Followed by risk on the y-axis, which is represented by beta. In accordance with data correlated, we can form our portfolio risk made with this curve. Refers to our portfolio risk. We can then see a general trend that as we can see by our final product, that by reducing our level of unsystematic risk along the y-axis, we can increase the number of securities in our portfolio to diminish our risk. How beta securities are represented graphically that identify the volatilities within the market. So we'll draw the vertical axis, which represents our share change, represented as a percentage. And our horizontal axis, which represents our market change, represented as a percentage. We then put down our values. These are the negative values. We'll then plot our data along the graph, then further understood by drawing a line of best fit. By understanding the slope of the line of best fit, we'll better understand the volatility of the market, whether it is positively correlated or negatively correlated. If beta is represented as a high beta, which is represented in our positive graph, which is greater than 1, this represents it to be more volatile than the market. This could be an example of a high-risk technology company. If it is represented as a low beta, less than 1, it shows that the company is less volatile than the whole market, which is represented in this area. Example would be an electric utility company.